Hey guys, today we have a really exciting topic. We're going to talk about investments with a higher return than Nasdaq and S&P 500 in 2025. This ticker is up 99% by the 24th of September in 2025, which is more than 7 times than S&P 500's growth rate and 5.5 times of what Nasdaq has grown this year. This ticker is the China AMC Hang Seng Biotech ETF. At its highest point in early September, it was up 120%. If we filter out the top performing innovative drug companies in China that are listed on the Hong Kong Stock Exchange, their stock prices increased from 60% to a staggering 400% year to date. So in this video, we're trying to understand why the entire Chinese innovative drug market is blossoming, whether or not this is still a great investment opportunity for us to get in, even though it has skyrocketed. Quick reminder to join our investment community on WhatsApp, which is free of charge. Link is in the description down below. We have received a lot of positive feedback from our members in the investment community. They're able to continuously make profitable trades. You'll also get a glimpse of the fundamental analysis we do. How do we understand a sector's growth, as well as technical analysis for individual stocks. Let's dive right in to talk about the industry overview from a higher level standpoint. To understand how much of the innovative drug market is growing in China, we need to rewind to 2015, where China began to overhaul its drug regulatory system. The country had just 160 compounds to contribute to the entire global pipeline, or less than 6% of the total. But now the size grew dramatically because the reforms helped streamline reviews, enforce data quality standards, and also improve transparency. On another note, the Chinese government's Made in China 2025 scheme plans to elevate manufacturing in 10 priority sectors, which includes biotechnology. And as you can imagine, it further attracts more investments into the field. In fact, number of novel drugs entering into development in China grew exponentially to over 1,250 last year. What's interesting is that this number far surpasses EU and nearly catches up to the US count of about 1,440. This indicates that there is a structural change in the international innovative drug market based on how truly innovative China has been. According to the VP at Norstella, it wouldn't be much of an exaggeration to suggest that China will overtake the US to be the top player in the upcoming few years. This is a great visual to show how Chinese drug makers are increasingly truly innovative over time. The orange bars that you see here represent the Chinese drug making companies. And you can see that from 2020 to 2024, out of the top innovative drug companies worldwide, Chinese companies take up 20 of the spots. What paints a more promising picture is global pharmaceutical conglomerates flock to close licensing deals with Chinese companies. This is a great sign that the long-term competition for the next blockbuster drug could be moving to the east. In the first half of the year, Chinese domestic capital and company accounts for 80% of all the global pharmaceutical deals. If we go back to the previous slide, a case in point is that Pfizer has set a new record because it announced a $1.2 billion upfront deal with 3S Bio for a similar drug that Akeso produced that cures cancer. The stats are telling us that these deals are increasing in both value and frequency. It's a sign where international pharmaceutical companies will have to consider the innovative drugs put forward by Chinese companies in order to stay competitive and add new products to their product mix. Recently, we have been seeing a China Biotech's DeepSeek kind of moment, and this is the story. Former US President Carter had a brain tumor but miraculously survived after going through radiation therapy and immunotherapy. But what was a big surprise was a drug called Keytruda played a huge role in helping the 90-year-old survive the tumor. It is a cancer-curing drug that is manufactured by Merck. But what was as shocking as the DeepSeek moment is that a novel cancer drug produced by Akeso that came out more effective than Merck's Keytruda's performance. The clinical results show that AK112 extended patients' progression-free survival by 5.32 months and reduced the risk of disease progression or death by 49%. All these progression did not happen overnight and definitely did not come out of the blue. There are key factors contributing to the industry growth, and let's walk through them. The National Medical Products Administration from China is keen to speed up the approval process. It also helps with speeding up the clinical trials. Leading Chinese biotechs enroll patients in PD-1 clinical trials at a rate of 1.8 to 3 times faster than the overseas industry average. They're even performing better with the GLP-1 clinical trials, where they are performing 5 times faster than their overseas counterparts. They don't just do it faster, they also do it cheaper, from lab experiments and animal testing to human trials. This is because they have a massive patient pool and a centralized hospital network. They can recruit people for trials in a much faster manner. They can also afford to run multiple trials simultaneously to find a winner or quickly launch a new project as long as they have a new idea. They also have an R&D efficiency advantage because it takes them faster to pick a compound for a preclinical stage. It only takes them around 12 to 20 months to move from mechanism confirmation to the preclinical candidate compound selection stage, which means that they are 30 to 50% faster than the time where the overseas competitors have to spend. The National Healthcare Security Administration also announced that they will introduce a new Category C of innovative medicines for its public medical insurance system. With medical insurance program covering now the more expensive novel drugs, they are more accessible for patients, and from pharmaceutical companies' perspective, it presents a broader market opportunity and reduced drug development payback periods. Benefiting from the maturity of the medical insurance negotiation mechanism, within the group of innovative drugs that made it to the catalog between 2021 and 2024, 90% of them made it on the catalog within 2 years since their market approval. The different types of innovative drugs that fall under different categories will be sought after as well. As a quick recap of the ticker performance, it has gone up 120% year to date. Another interesting observation is that just on the 11th of September, the ticket dropped at max 8.72%. What happened on that day and why it triggered a continuous downfall even though it recovered its ground on the same day? If you want to know all these answers, and you also want to learn a little bit more about what are some of the more investable companies within the entire industry in China, leave a comment down below and we will film a part 2. You know the drill. Join our investment community on WhatsApp. You can scan the QR code here, or you can click on the link in the description box down below. See you next time.